Hello traders and welcome to another weekend's market forecast video. So hopefully everybody is having a great day and a great weekend. So let's dive in straight into what we can expect into the upcoming week. Of course, over the last week, the market reacted exactly as we expected once again. The dollar moved to the downside after the completion of this bounce to the upside right here. And now we are into another corrective stage that we are expecting the market to turn down once again. So this will be our bias heading into this week. It's worth to note that there will be the USDJPY on Wednesday the 12th. So that could be potential cause for some volatility, potentially a move to the downside. We will see how that goes. And of course, we always inform our members because we provide the detailed analysis only into our membership service. So over here, you just get our general bias of the market without any short-term updates wherever they are necessary. So if you want to get all the updates and details, the link is in the description. You are welcome to join us and we can help you out. So overall, dollar index still moving to the downside from the high from the 13th of January into this process of this downwards trend that we see at the moment. Dollar yen, another one of the pairs that we have been expecting this move to play out. So this is the move that we were getting over the last month or so, which was expected in a way. So now we are soon approaching an area of interest in the dollar yen, which we are expecting the market to reach pretty soon during the week. So from here, we will see what the market wants to do, but we are expecting, as you know, more downside and sideways price action in the dollar yen still to play out for the time being. So this week will be an area that the dollar yen can reach, and from here we might get some reactions. However, the market remains sideways and to the downside from the 15th of November, as you can see from these moves that we have been observing. And we have informed that ahead of time for this drop, this move, and also this move right here. So 3 moves in advance. Our members, they have been aware that yen is getting sideways since November. So that's exactly what the market is doing, as we said. So once again, you are missing out on very important analysis that we see ahead of time for big moves and risks of the market. So all you have to do is join us with the link in the description so you know exactly what is happening and why. That's the most important thing when you have the data as a trader, so you know how to be prepared ahead of time. For the euro, same idea. We're expecting it to continue higher as far as we're above 13th of January. This retest of the lows from the 3rd of February as well as a pullback. So we are expecting the market to maintain the 103 level and turn to the upside heading from this week onwards. Ideally, we are looking for a move for the 107.50 to 108 area, as you are aware from these lows that we had in the 2nd week of January. Also for the pound dollar, we're expecting it to continue higher as we have been expecting anyway from the middle of January. We have finished with the first move to the upside. We have got a dip to the downside, and now we are accumulating for another move to the upside towards 128.29 area whereabouts. So this is the next bigger move that we can see for the pound dollar as far as we remain above the low from the 3rd of February. For gold, what we can say, we have got a big move to the upside as expected, about 11-12% move, and the market keeps on making new all-time highs, as we have been saying since the last couple of weeks, exactly as we expected again, with small pullbacks along the way, which was also our expectation that the move will not provide any major pullbacks after this accumulation. We can also see right here a possible reaccumulation for another push higher towards 2,900, 3,000 area. This is the area that we can see gold trading very soon during the month of February. But short term, we cannot deny a possible double correction here and create another accumulation before the next move. This is the only shorter term probability apart from the next move higher we can see. Overall, we are still bullish, and we could expect gold to hit new all-time highs again within the month of February towards March. Now for oil we expected this drop to the downside. We have broke the level of 72, which was expected, and now we might see a possible bounce to the upside in the short term. We are not expecting this one to be a move to the upside which would develop into a trend. This will be a trap for more downside that we can see later down the line. So for the time being, this is a possible bounce, but again, this is not a bullish market, this is a bearish market, and any bounces are for selling for the time being in oil, and that was the case since the last couple of months or even years since 2022. So this view does not change. Oil remains overall bearish in the bigger picture and the bigger time frames. If you want to know the levels that you can get a bigger reaction later down the line, again, this kind of information we only provide it to our members, and you can join with the link in the description if you are interested and if you want to take things seriously in your trading and know the areas and how you should be positioned ahead of time. Now for US natural gas futures, we can see that the market after this drop to the downside is going to give us a reaction from this area, which is exactly what is happening at the moment. But as we have disclosed before, this will be a time in which the market will have a tough time, and probably is going to be a sideways to lower rotation. It's not going to be yet a level of support for the market. There are many reasons why we believe that. So if you want to know the true reasons, again, the link is in the description. If you join our membership service, you get all the details and what we can see from our own data services and our own experiences, because the quality information is not for free and someone should pay for that, including ourselves. We are investing as well in certain tools that we can see certain things that you cannot. And we are using our experience that we have throughout the years about our analysis that works 90% of the time in most cases for the bigger picture. And what we can see is that the market right here, it has a level of insufficiency and is going to have a fight between buyers and sellers. So this is for the short term. For the long term, that's another story. We can see later on when we get there. But if you want to know ahead of time, again, feel free to join us and we can give you all the reasons and what we see at the moment. Now heading over to the indices, the S&P 500 SPX cash index. As we have said, from this level, from the 13th of January, we expected the market to react higher. So at the moment, what the market is doing so far, it's a pullback, and this is an accumulation for another push to the upside in terms of the price action. And of course, the market overall is supporting that view for the time being, but it is very important that the 13th of January pivot is going to remain intact, and buyers will be able to push the market for a new all-time high heading into the end of the month and heading into March overall. So that is still our bias for the S&P 500. There is no reason at all to be bearish in this market. It's very technical, and all the moves that have been happening so far, they have been technical, and all the pivots are intact for another new all-time high to happen soon in the market. The only change will be if this becomes a bigger choppy double correction before this move to the upside. That is a possibility, we cannot deny that, but overall from these levels the market is supported for new all-time highs. So this is what you need to be aware if you are trading the indices, especially the S&P 500 at the moment. Now, if you want to know the bigger picture and what we can see later on and the levels, again, feel free to join us with our monthly membership service so we can explain to you what we see ahead of time and why. And you will be aware of that and be able to calculate your risks or rewards, and depending if you are a shorter term trader or longer term, this will help you to decide when you should trade, when you should not trade, and when you should stay holding specific stocks, and when you should take profit. At the end of the day, this is the most important thing for any serious trader to know, because if you don't know the market ahead of time, most probably you are going to make the wrong decisions, as you might have been doing already, because at the end of the day, 90% of retail investors lose money because they don't trade the market with logic, but they use emotions, and that is a major concern if you are using your emotions in the market. And lastly, for Bitcoin, the market remains again very technical. I don't understand why a lot of traders have been wiped out of the market. This is also a lesson for anyone who wants to use leverage, that if you are using leverage in this market, you are destined to fail. If I'm not mistaken, they reported $10 billion of losses from all these uneducated retail investors, because they chase the market higher with leverage, and that's never a good idea. The market remains very technical. Long-term holders, they are okay to go. They should continue holding for another push to the upside. The market is really into another distribution phase since December at this 100K to 90K area. And soon enough, the market is going to get ready for the next move to the upside. But first, this is what could take place right here. We could waste the month of February even before we move to the upside, or at least the next week we are playing at these areas, right? But soon enough, the market remains bullish above 13th of January, the 3rd of February, right here. Bitcoin remains supported for another move to the upside, right? So this is what we can see. Hopefully you have got value from this weekly forecast video once again. So if you have any questions, you are welcome to send us an email at support@ahoraforecast.com about our services. Otherwise, you can leave a comment down below. Don't forget to like the video so you can get more of this type of content in the future. And also more content in general, which we are looking to provide to you, different type of trading or investing topics in the future, so you can get a better understanding about markets and about generally which approach might be suitable for you, because our service also is not only for short-term trading. We don't really do much of that. It's more about the right way to trade, and also the right way to invest, and also understanding the differences between cycles, and understand the major pivotal moments of the market, which most people, unfortunately, they don't understand. And that's why the market wins them over time, because they always get confused. So you already know that if you want to get most of the value, like our members have been with us over the last year, they are still with us for a reason. Feel free to check us out with the link in the description, so we can help you to achieve your trading or investment goals. Because we are heading into a rough period of time pretty soon, so you need to be aware of what is really going on in the world, and how this is shown in the actual financial market charts, and what we can see ahead of time. So you have to be flexible. You have to possess different types of approaches that you can benefit from in the market, whether it's short term or longer term. There is always a time to execute certain approaches, and the people that are stubborn, and the people that they don't want to learn and be adaptable to the new market conditions, are the ones that are going to lose at the end of the day. So that's what we have for this weekend's video. So hopefully that was also educational for most of you. So see you in the next video. Enjoy the rest of your Sunday and your weekend.